Hey folks, Andrew Packer here, and welcome to Trading Tips. Every once in a while I get some interesting questions from people about, how to invest, what am I looking at right now, and that sort of thing. And one of the more interesting questions that I got lately is, what would you do with an extra $50? That's it, just $50. Well, my answer is, of course, that I would invest it. Now, how I invest $50 and how you invest $50 might be very different things. If you just receive a one-time $50 present from someone, it might be tempting just to throw it in the bank or otherwise just kind of invest it in kind of some low return thing, or just hold it on the side until you found something that you wanted to buy for $50. And it's not really much of an investment. Savings accounts return pretty much 0%, if anything. And anything that you buy, maybe you get a good meal out of it, maybe you get a nice little experience out of it, but that's not really an investment. If you had a one-time $50 windfall and you wanted to invest it and you already had an investment account, I would just put it right in there, and then I would just look at an existing position to add to. That's a pretty simple way to take advantage of just the extra money that comes along in your life from time to time. But let's kind of expand the question a little bit. What if you were getting $50 a month from some source, generous family member, dividends on a stock investment, something of that nature? In the event of a recurring $50, well, a lot more opportunities are opening up for you in the investment world. For instance, you could start what's known as a dividend reinvestment plan, or DRIP. Plenty of major, well-established companies with a long operating history will often allow people to directly invest money with them instead of putting money through their brokerage account. Now, this provides a lot of benefits, even though many online brokerages are now starting to offer $0 commissions, and they've been slashing that down for a while. When you're investing directly with a company, you don't have to pay any of the other hidden fees or any of the other issues that you might get through your brokerage account. And when you invest with the dividend reinvestment plan, that $50 might get you maybe 1 or 2 shares of a company a month, but as that company pays dividends, they will just automatically reinvest those dividends into additional fractions of shares for you. So if you're putting $50 a month into a DRIP program, all of a sudden you're creating this virtuous cycle where you have money coming into a stock, that stock is going to pay dividends, the dividends are going to be reinvested, and the new additional capital you're putting in each month will also be reinvested. And over time, using a DRIP, you can build up a pretty sizable amount of money over time. And of course, the great thing about these companies is because they are paying dividends, and because over time dividends can become a huge part of your market returns, you don't have to be as worried about the stock market going up or down. Obviously, if a stock gets hit pretty hard, the $50 a month is going to buy you more shares per month than you would get otherwise. If the stock market's up, it's a little less, but if the stock is up and the company's raising their dividend over time, as many of the DRIP companies do, you're just going to end up getting more and more income out of that position that gets reinvested into more shares. And eventually, you can stop buying more shares with the money and just start taking the income out to spend on other things. And of course, besides the DRIPs, there is, of course, one other thing that you can do with $50, and that's do a little bit of option trading. There are plenty of inexpensive options out there. These are kind of what I call the moonshot trades. $50 in the options market, just the way the contracts are stated, being for 100 shares, is basically an options trade of up to 50 cents would be $50 a month. But this is an area where you could theoretically double or triple your money time after time again, depending on what kind of trades you do. So with a 50-cent trade, for example, let's just say a company's reporting earnings in a week. You think the company's going to do very well. It's trading at $10 a share. Maybe you buy the $15 call, it expires in 2 weeks. Now, maybe the shares don't go up 50% in 2 weeks, but maybe earnings are a lot better than expected, and instead of going up 2 or 3%, the option goes up 20, 30%. Well, you can still take profits on the option before it expires and before that gain evaporates, because the option would otherwise expire worthless. But that's a much smaller trade, and it has a much lower probability of playing out than some other in-the-money option trades or other option strategies out there. So it's a bit more of a challenge. But again, if you've got a recurring $50 a month and you want to have a little fun with your investing and you've got everything else squared away with a nice portfolio of stock holdings, this would be an interesting way to go. And then, finally, with $50, it's not necessarily a lot of money to start with, but There's a lot of tools out there to just kind of learn how to trade markets, to look at chart patterns. There's a lot of free information online these days. But just buying a few books, studying, learning some of that, and then putting some money to work, that's also a fantastic way just to take $50 and put it to work right now. So, what would I do out of all of these strategies? For where I'm at, I would probably just look into doing some more options trades. $50 can also help start building a new stock position, coming out of dividends from other positions. But for the most part, this is going to give you the biggest bang per buck short-term potentially, but it's also going to be the riskiest. The drip is going to give you some fantastic long-term results. So that's probably where you're going to want to be if you're just starting out investing. Even though it's going to be a little slow going to start, 5 years, 10 years, you've got an entire investment journey ahead of you. Over time, that's going to be a fantastic winner, and it'll probably make up for all of the losses that you're doing on some of the other fun trades here. So, looking at kind of the occasional little bits of money that we get here and there in our lives and how to invest them, we've got a lot of opportunities. And the great thing is that there's more than one way to do it. And if you're aggressive, there's a great way. If you're more conservative and long-term oriented, there's a way. And then, if you just want to even save it away for a rainy day and try and, target a company to buy on the next market pullback, you can even do that too. But for whatever options you have, there's always something that you can do to help improve your wealth over time. All right, that'll wrap things up for this video. As always, I'm Andrew Packard saying stay safe and stay solid.